This is a video tutorial on how to use the alerts that are sent from our AI analyst in our Discord server. The first thing I'm going to talk about is the indicators that I use on my chart and what they mean. Later on in the video, I'll go into more details about them. So the first set of indicators is going to be EMA. I use EMA 9, which is green in color. Green means go, entry. Make your entry here. EMA 20, which is blue. Blue does not normally mean go or entry, but it's the closest color to green, and EMA 20 is a potential entry area depending on how the chart has been reacting in the last 30 minutes previous to the alert. EMA 50 is yellow. This is caution. EMA 100 and 200 are red and orange. You can pick whatever color you desire, but EMA 100 and 200 represent average down areas, and I will get more into detail about that when we get to that point. The next indicator is going to be SAR. On some platforms is known as PSAR. On Webull, it's labeled as SAR. The only thing that you can change on SAR on Webull is acceleration factor. Set that to 0.01. Acceleration limit, set that to 0.19. The next indicator is going to be super trend. The colors, leave that on default, red, green, red, green. The input, I use length 14, factor 5. I have members in the server that use 10 and 3. It's a little bit tighter tolerance. Either or works really great. The next indicator is VWAP, volume weighted average price. The only thing that I change on this is the color. And you can pick the color for VWAP to any color that you like, whatever you're comfortable with or easy on your eye to look at. And let me open up all the indicators on the chart so you see what it looks like. So the green is EMA 9, the blue is EMA 20, the yellow is 50, red is 100, orange is 200. And then this other green color, this is super trend. Now keep in mind, super trend does switch colors as well, and these circles that are red or green, that's SAR, and this is VWAP. And I will get more into details on this throughout the video, but let's bring up the actual alert when it comes in. So in this case, we're going to use HTGM as our example alert. The first alert on HTGM was at 4:01:08 a.m. on December 12th, 2022. And it should be noted, let me say this right now as well. Every alert, whatever data is displayed, is calculated in the last 60 seconds. It does not have to be the last candle. It's not the last 30 minutes, anything like that. From whatever time the alert comes in, it's 60 seconds prior to that. So from 4:00:08 seconds a.m., there was 200 until 4:01:08 a.m. there was $213,347.34 cycled through HTGM. That's the last 60 seconds. So when an alert comes in, the first thing I look at is total invested right in the alert calculations area. Total invested is $213,347.34. That's the first thing I look at, depending on the time of day, but we will start from 4 a.m. I like to see that number be 50,000 and above. That's when it really grabs my attention. Although every alert that comes in the server has potential to run. The next thing I look at, right under the volume category, is total transactions. So there was 759 transactions on HTGM from 4:00:08 a.m. until 4:01:08 a.m. That means the stock was either bought or sold 759 times. The somewhat safe, sometimes it says watch this, sometimes it says safe. That is just the calculation rating of the volume. So once the alert comes in, I look at these two things, and if I like what I see, I will open up the chart. And as we can see right here, 4:01 a.m. This closed at 88 cents. It closed as a red candle. I do not make entries on red candles. So majority of the times when a stock gets alerted in our server, we wait for a pullback to EMA 9 or EMA 20. Let me find a place in this chart for better explanation. So 6:26 a.m. Let's say there was an alert. Actually, there might have been 6:26. Okay, 6:30. We'll use this as our reference. $88,000, 471 total transactions. Perfect. So right here, 6:30 a.m. This alert, you could have made an entry. Let's say we caught a 6:26 alert, right? And there might have been, I just don't have a screenshot of it right now. I can look through. But let's say the alert came in right here. So what I do is I will measure price down to EMA 9. And you can see it right here in this little area. If this percentage is greater than 5%, I will wait. So if price is more than 5% away from EMA 9, I will wait for a pullback, right? And as you can see, it happens right here. Although this chart is kind of a cheat basically because we already know what happened, but this is real life situation as well too. I will wait for the pullback. So the stock price pulls back down to EMA 9, and as we see previously, and this is where I had mentioned about, you know, whether your entry should be EMA 20 or EMA 9. But as you see right here, from 617 until 621, the chart bounced off the 9. So when you see the pullback happening and the green candle lights up, that's when you make an entry. All right, you make entries on green candles, and these little doji candles or these little specks, these are not candles. That's, even though it's green in color on Webull, I do not consider that to be a good entry. But right here at 6:30 a.m., that could have been a great entry. Since we got the first alert at 4 a.m., what would I do at this point? So at 4:01 a.m., the first alert came in, and we see red candles, pull back, pull back, pull back. It goes and it hits super trend, and then it bounces back up. All right, so we can see right here as well too, SAR is red. I do not like to make entries on any stock if all my EMAs are close together, all my indicators are really close together with the price, and there's something red above me. Whether it be super trend or SAR, I will not make an entry. You know, visual inspection of the EMAs, you should see them spread apart a little bit. You know, whether they be 5% apart from each other, 3% apart from each other, anything that's not really close together. All right, so I would have ignored this chart. By ignore, I don't mean like, you know, just completely ignore it. What I'm saying is I would have put it on the back burner to keep it on watch for later on to see when activity started picking up. And if you don't have a lot of monitors to keep charts open on, our alert system will keep reminding you, hey, there's activity going on with this stock, open it up. There's activity going on with the stock, open it up. Back to our picture, the screenshot. From 4:01 until 6:30 a.m., there was 15 alerts on HTGM. So this constantly told you to remember HTGM. Remember HTGM. And when there's a lot of alerts like that, it can get a little bit annoying, but it's telling you, watch the chart. Take a look. You might be getting ready for liftoff. So from 4:01 all the way, and anytime the indicators, you know, the EMAs and all that are above your price, I will not make an entry. All the way up until 6:19. Even 6:17, you can see it's the start of breaking everything. But I would have waited for this initial spike, 6:20, the pullback, and then 6:22 would have been a good entry point. All right, so you make entries on green candles when it's close to EMA 9, but no greater than 5% away from it. All right. At least these are my rules. Some people have more tolerance. Some people have less tolerance. Everybody is right in their own way about that. Mine are no greater than 5%. You make an entry. And then, for explanation's sake, we're going to use $100 as an example. All right. So if we made an entry with $100, when price goes up 10% from your entry And let's say we caught the entry right here at, what is that? 85 cents. All right. Price ran up 10%. We would have trimmed. All right. The way I trim is every 6 to 10%. So if the stock moves up 6% and it struggles and it stops, I will trim my 6. If it goes to 7 and it stops, I will trim my 7. But if it continues to go, you don't have to take the money out right away. Like, if you see it pausing and waiting there for a couple of seconds, trim it. There is no reason to not trim it. So every 6 to 10%, if the price moves up 6% from your entry and it stops and it pauses, hey, take your profit. If it goes up to 10%, take your profit. But let's say it continues to run, from entry to 20%. Do you have to take a 10? You don't have to. If you see the price moving up, you can continue to ride the wave. But when you see it pausing and stopping there, even if it's 5 seconds, consider trimming. So our first trim would have been at 93 cents. And then the price went up again. So we measure from here again. And we see that we hit 8%. You could trim twice. So we got a total of 10 and then another 18%. And then you see the pullback. And then it goes back up a little bit. So now it's starting to consolidate. This is your consolidation zone. Or pullback as well. It's not really a pullback because the EMA 9 caught up to price, not price pulled down to EMA 9, which is good. This is what I would like to see compared to the price pulling back down. The price starts to go back up again. And we measure an additional 6 to 10%. And we see it pausing right on 8%. All right. This is your other trim. So you trim once, trim twice, 3 times, 8 to 10% each time. You're up 30% basically. You see it pausing, and then it spikes up to $1.30. Which is 14%. So now you see the price pulling down. All right. How do I make my exits? And this will not always work in your favor, especially on HTGM, because sometimes the price will continue to run up higher. But the way that I make my exit, if the price of the stock falls below my previous trim, I'll exit my position. All right. So we trimmed at $1.30 again, and the price pulls down. It bounces up a little bit right here, and then it falls below $1.13. Cut your position. Right? This is pull down. The stock could be giving up right here. Now, you could continue to watch the chart, but me personally, I will get out, especially if I'm up in profit from here all the way to here, 26%. Even though I was 52 up here, and I understand that's a lot of tolerance, but hey, that's just how I personally trade. The chart is not weak at all. You're still above your indicators and it's still moving on an uptrend. So you can make another entry. And let's say we made an entry at 648 at $1.15. 6%. You see it pausing, trim, it pulls back. You don't have to cut it because it did not really fall below your entry, but it's moving sideways and then it runs up. Now we're up another 33%. You should have had quite a few trim areas. All the way up to $1.82. That is 56%. All right, so you trim. Let's say this was our previous trim area. You trim up here again, price falls below this, cut it, and you see it climbing back up. You can make another entry. And that's how you continue to ride the wave, all right? Entries above EMA 9 or 20, depending on how the chart has been reacting. For example, right here, if we got an alert and this is the first time looking at the chart, let's say at 7:06 a.m. Well, if you look back from 7:06 all the way to 6:39, you see that the chart has been reacting on EMA 20 and the 9. So it's a mixed signal, but you wait for the pullback. And then you see it hit the 20, it bounces back up, make your entry. Now we're going to use HTGM as the example again. Although I hope nobody would have made an entry at 7:30 as their first entry, because right now the stock is already at its peak. There's no, don't chase, right? If something is 80% already increased, do not chase it. Wait for the next stock, wait for something else to play. Do not chase the high runner. But let's say we messed up and made an entry at 7:29. As you see, the chart starts to fall down. You see it bouncing off the EMA 50 right here, and it meets resistance on EMA 9 and 20, so it does not break it to go back above. You should be extremely cautious at that point. I normally do not cut losses right there. I will wait for below the 50. If the stock is bouncing, below this indicator right here, then I'll cut it. But if the stock drops down, bounces off to 50, and let's say it has you breaking even, it bounces back up to break even point, keep your risk low, especially when you're up in profit already. But if this was our first initial entry, now we're going to talk about the EMA 100. Right? Oh, well, I'm sorry. Let me note this. Since super trend is red right here, if we are just looking at this chart, and let's say we see it at 819, and super trend is red, do not make an entry. All right, super trend is sort of like the magnet. If you take two magnets with the same sides and try to stick them together, they push away from each other. So if super trend is red, that means it's negative, price is negative as well. It's going to continue to try to push price down. If super trend is green, it's positive, price is also positive, so it's going to try to push the price up. And as you see right here, it hits super trend and it falls down. It gets close to super trend and gets pushed down, pushed down. Although it hit $1.97 at open, and then it just gave up. So yeah, that's another thing that should be noted too. Super trend red, do not make an entry. If SAR is red, depending on where your price is on the indicators, if all the indicators as explained at the beginning of the video are real close to each other, do not make the entry. If the indicators are far apart from each other, and SAR is up there and you think, you know, the chart looks like it's going to shoot back up top, you got some room for profit taking and profit making over there. But if we made an entry at $1.69 at 7:29 a.m. and the chart gave up, and we don't like to take losses, so right now I'm going to talk about the average down part of the strategy. We bought $1,000 of HTGM, and we'll say $1.68. So 1,000 divided by 1.68, it's 595 shares. All right, we're gonna average, or we're gonna round down or round up. We'll just say 595 shares. This is my average down strategy. So 595 at 1.68. So we know our average price right now is $1.68. Price fails. We don't like to take a loss, so we wait to see what happens on EMA 100. All right, the first sign of a green candle, when you see a sign of a green candle, you average down. The way that I average down is 3 times my initial cost. And since we chose $1,000 as an example, we are going to buy $3,000 more at $1.35. So 3,000 divided by 1.35, enter, is 2,222 more shares. And right here is 2,222 at $1.35. Calculate. Our new average price is $1.42. So from $1.68, we dropped it down to $1.42 with 2,817 shares, $3,999.30 total invested on our position. $1.42. After you average down, it was shot back up to $1.46. You could have cut your position at $1.42, breaking even. There is no need, especially if super trend is red, there is no need to continue risking. Your average down move in your trading is to make it out of a bad trade with as little loss as possible. All right. Now, this part of my strategy, some traders do not like it. And maybe because they are not averaging down correctly. But to put it in an analogy, for hunters, all right, let's say you go hunting and you hit the deer in the rear leg and it falls down, right? Your next shot is not gonna be another leg shot. Your next shot should be to put the deer out of the misery because it's suffering. The same thing with trading. Your first shot was $1,000 at $1.68. It was a leg shot. All right. Your next shot is going to be on EMA 100 to average down. You're losing. Your position is down. Now remember, you could have cut your position at EMA 50. I don't like to take losses, although I do sometimes as well too, but I do not like to take losses. So therefore, I'm going to do my average down. But I'm not going to average down with $500. If my initial entry was 1,000, I'm not going to play with it, all right? I'm not going to keep adding small amounts of money to a losing position. What I'm going to do is I'm going to bring my average price all the way down as close to actual price as possible and make my exit. Sometimes you might have to do an additional 1,000. You know, if you already have, if your initial cost was 1,000, you average down with 3,000, but it does not bring the price down as low as you'd like to see it, add another 1,000, right? And you average down. Break even or minimum losses, get out. If you see the price moving up and it hits like $1.40 and it stops, get out. It's only a 2 cents loss. All right. With how many shares did it give us? It's a $56 loss because you have 2,817 shares, so it's a $56 loss. But if you see the price in a green candle and it stops, you know, like the close happens, right? You know, there's no wick on the candle. Wait for the next red candle to pop. You know, wait for it to stop and slow down. But you have to be ready to exit your position entirely. Do not play around. And the reason why I am talking so much about this right now, you know, and making a strong point on it, is because a lot of people average down and they average down the wrong way. So once again, and I will stress this, initial cost was $1,000. It was a good but bad play. And the chart starts to go down. You're down on your position. It hits EMA 100. Your average down amount has to be 3,000 or greater. All right. Times 3 your initial cost. Do not play around and do $500. You're just adding to a losing position because you could miss an opportunity of the spike up and then all of a sudden it pulls back down and it just continues to fall. So average down right away and get out right away. Now, why do I use EMA 200 in this? It's the same thing. All right. If the candle blows past EMA 100. So if your candle falls below EMA 100 and it does not get back above it right away and close like some kind of green, wait for your average down part to be to the 200 area. From $1.90 here, we're gonna do $1.97. So clear. Let's say we got 1,000 shares at $1.97. That's 507 shares. All right, let me bring this. 507, 1.97. And our average down spot is going to be $1.40. Clear. So we do 3,000 divided by 1.40, 2,142. So 2,142 at 1.40, calculate $1.51. $1.50. All right. Right after your average down, your price shot up to $1.50. You could have broke even. get out. Average down, get out. That's my average down part of my strategy. A quick recap. Entry, green candle, no greater than 5% from EMA 9. So your price cannot be more than 5% above EMA 9. Do not make entries on red candles. You don't know where a red candle trend is going to stop. Make your entry on a green candle. Trim every 6 to 10%. If price falls below your previous trim point, make your exit. If, let's say, you get in and all of a sudden the stock, and this happened to me a couple of times, I got in and the stock ran up 30% in less than a minute. Like from when I got in, it ran 30%. At that point, it ran way too much in little time. I'm not riding the wave. That is the wave. It took me for a ride. I got out. And this happened on live as well too. There was a couple other members that made the play as well. And we all got out 30% in less than 1 minute. So if you get in and the price shoots up 30, 40%, get out. You're not going to miss nothing, right? You might get pulled back down to your entry and end up taking a loss sometimes. All penny stocks are garbage, all right? They are day trade stocks. Low cap penny stocks are garbage. Do not expect these stocks to run up $40, $50. Play them for 10% at a time. That's the best advice I can give you. And if we look at HTGM from 401 all the way till 7:27 a.m., it ran 97.8%. And as shown in the video, you could have made 30-40% multiple times. It's not just a 0 to 97%. You could have did that 3-4 times, which would have equaled out to 120%. That's all I have for as far as the strategy goes. If you guys have any questions about any of this, there will be a link in the description about how to join our server. My username is AKAENQ50 on Discord. If you want to add me directly on Discord as a friend without being in the server, you may certainly do so. It's all lowercase, AKAIANQ50 hash 0101 or pound 0101, which whatever you like to call the number symbol. Another thing that a lot of members have asked me is how much should I start my account with, and how should I calculate what my scaling, or how should I scale my positions. So what I tell everybody, and I will do a full detailed video on this, but right now I'm just going to give you a brief description. What I tell everybody is calculate your monthly expenses, and if they are $5,000 for explanation's sake, real quick, $5,000 in a month is what you spend. Your account portfolio should be $5,000. Right? Your daily goal should be, as a beginner. Now, I don't know your experience level. You might be already past this point. But as a beginner, you should try to focus on making 1 to 2% of $5,000 per day. And stop trading at that point. All right. If you make 2% of your account in a day, stop trading. I've seen many people make 10-15% right away in the beginning of the morning, and they continue to trade and end up losing half their account. That's called over trading. Do not over trade. If you make 1 to 2%, stop trading. This is for beginners. Now, there are experts out there and, more experienced traders that shoot for 10, 15, 20, 30%. More power to you. I am talking to the beginners in this part of the video. So do that every day and try. If your first week you do 1 to 2% each day, right? Your second week try to go to 2 to 4%. Third week try to go for 5%, and keep it at 5% for a little while. All right. You should be able to cover your monthly expenses and have your account growing at the same time. That being said, if you are not subscribed to the channel, please hit that like button, hit that subscribe button, bell notification. There are more videos to come very shortly. Thank you for watching, and I hope you guys enjoyed.